looking out into 2022, we think oil prices are probably higher on average than they were this year, but the rate of inflation should be lower. We're coming from a higher base. The rate of inflation should be somewhat lower. So those pressures will continue, but not quite at the same level of intensity. There is still some possibility that higher input price pressures, including oil, make their way into broader inflation, so-called or core inflation pressures. Particularly in Asia, I think we have a dynamic where the weight of oil in the CPIs, in the consumer price baskets, tends to be smaller. So the near-term impact of higher oil prices is less, but you have the possibility that those ultimately feed through, in part because they're more regulated prices in Asia than in other regions. So they don't immediately change, but ultimately, as fiscal subsidies are adjusted or removed, you can see energy prices move higher. You saw that, for example, in the most recent Korea inflation release.
Okay, let's talk about inflation more broadly then in Asia, because things appear to be a little bit more contained, as you were just alluding to there, within central banks' comfort bands of between 2, 3, 4%. We're certainly not hitting the high mark that we're seeing in places like the United States, where we have inflation running at around 6%.
It's a really stark contrast in both developed and emerging markets in other parts of the world. You've had huge increases in inflation, 7 to 8% headline CPI inflation in other emerging market regions, so Latin America, CEMEA. It's been much more tame in Asia Pacific, again, both in developed and emerging markets. And a couple of key reasons for that: we've had a much more benign path of food prices, which are a significant effect on the overall basket. And core inflation just hasn't accelerated as much. We think that's because, again, partly because more regulated prices in Asia, and those take longer to move, but partly because we've had less supply side damage. In general, there's been better control of COVID in Asia Pacific. Labor force participation has remained at reasonably high levels. Supply constraints have been significant in a few industries, but overall not too damaging outside of semiconductor and auto sectors. And so I think those things, along with less demand side stimulus, have limited the kind of upside of pressure we've seen so far in this part of the world. I should emphasize, we do expect inflation to be higher in 2022. In fact, our forecasts are a little above the consensus forecasts in almost every economy, but we don't think you're going to see the really sharp accelerations in inflation that you've seen in some other economies that have forced central banks to tighten very aggressively.